So you want to learn to become more profitable in Forex and begin to win more trades? Well, you clicked on the right video, because today I'm going to be showing you guys how to use the simple moving average indicator so that you can find the best trades possible. Before we get started, I need you guys to understand something. It doesn't matter if you have the world's best indicator on your chart. This market can be highly unpredictable whenever, you feel me? Just because the market is showing you buy, it can decide to go sell if it wants to. It's gonna be important that you guys use proper risk management, because I don't want you guys to be like,
I watched this video and he told me to use the SMA indicator and it would help boost my win rate. But when I tried to use the SMA indicator to boost my win rate, I end up blowing my account.
well, to be honest, you blew your account because 9 times out of 10, you used a fat ass lot size. You knew good and well that your account was not gonna handle that lot size that you use. I know this because I'm a victim of that. You know, I done took plenty trades that I thought, okay, I'm finna flip my account 2 times what's in it, and then I end up blowing my account. Now I'm mad. Now I can't trade for another week. Nah, I can't trade because I ain't got no money to trade. I done put my light bill money in the market thinking that I was finna flip my light bill money, and now my light's off. So remember, guys, it's important to use the proper risk management when you're taking these trades. So let's go ahead and get started. All right, guys, so I just wanted to quickly show you how these SMAs are gonna be added to your charts and how they work and what they look like once they are added to your charts. And here we are on the Euro GBP, and this is one of my favorite pairs to trade, just because this is one of the first pairs that I learned to trade on. You know, it was Euro GBP, USD JPY, and Euro JPY. Those were 3 of the first currency pairs that I learned to trade on. So it'd be kind of nostalgic for me to do my markups. And plus, pairs like these, they tend to respect market structure and things like that, versus when you have gold. I don't really like to use SMAs on gold and stuff like that, because gold is very random and gold can be very volatile, and they don't tend to follow the basic market structure like a pair like Euro GBP will. So yeah, that's why I wanted to do my markups on these, but we're gonna quickly get into it. So yeah, you can see that my chart is pretty much has nothing on it, and this is all you need, guys. You don't need all them Bollinger Bands, you don't need all them RSIs, Fibonacci, like you don't need all that extra stuff, right? We can still find a good trade without having to use all them extra indicators. You see what I'm saying? So the first thing we're going to do is you're going to want to go to indicators, right? And you're going to want to look up moving average. So I already favored it, and you're going to want to make sure you click moving average. Don't click the moving average convergence, moving average exponential. We're not doing that. We're using a regular moving average. Okay, so you're going to make sure you add that to your chart twice. Make sure you add the moving average to your chart at least twice, because we're going to be using 2 different SMAs, right? So we're going to be using the 50-day SMA, and I have my 50-day SMA set at this blue line. You can see I'm marking it and unmarking it. So that's my 50-day, which is the blue line, and my yellow line is my 20-day. That's the 20-day line, or 20-day moving average. And you can set it up to whatever color you want. You want it red and pink, pink and blue, blue and yellow. It don't matter. You feel me? So make sure you know which one is which, because it's going to be important that you know which one is which. So the basic fundamentals for having these SMAs on your chart is, I want you guys to make sure you write this down, right? So whenever you're looking, so it depends on what kind of trade you're looking for, right? So for sales, I'm gonna show you guys real quick. So if you can see, you see how this blue line right here, the 50-day, is over the yellow line, and as you see, the blue line is over the yellow line. What is price doing? We're looking at this price. What is price doing as this blue line is above this yellow line? We see that price is going down, right? So let me show you a different instance where the yellow line is above the blue line. Perfect. So you see how right here, the yellow line is above the blue line. So once you see the yellow line above the blue line, what does the price begin to do? Or the 20-day is above the 50-day, which is my yellow line is my 20-day and my 50-day is my blue line. So once the yellow line or the 20-day is above the blue line, what do you see the price begin to do? We see the price begin to go up, right? So whenever you're looking at the market, guys, if you see the 20-day moving average above your 50-day moving average, then that means the market is looking to go up. You feel me? And whenever you see the blue line or the 50-day moving average above the 20-day moving average, then like we see here, the prices begin to go down, right? So those are one of the main fundamentals for looking for these trades, right? So we're going to want to make sure we are paying attention to what these lines are doing, but you got to be careful, guys, because the markets will fake you out. And the thing about the SMAs, guys, they're a really good indicator, but the SMA is a lagging indicator, right? And what that means is it reacts to price, but not right away. It only reacts to price right after price does what it does. You feel me? So we're looking for these prices, and we're going to make sure we're paying attention to the current price action, because price action beats all. Price action beats any indicator that you have, any technical analysis. Price action always wins, right? You know what I'm saying? So we're going to want to make sure we're paying attention to price action and what price is actually doing. You feel me? So when you setting up these SMAs, guys, you're going to want to make sure you're mapping out your support and resistance lines. Make sure you're finding your support and resistance lines, and make sure that you're identifying your trend, right? Because the thing about these SMAs, they don't necessarily predict the future, but they do confirm the current trend, right? So SMAs, like I said, the SMAs will not predict the future. They only confirm the current trend, right? So whenever you're looking at a market and you're looking and like you're looking to get in for a sell or for a buy, you're going to want to make sure that that market is trending before you get into that market, because these SMAs, like I said, guys, the SMAs are just extra. You don't want to strictly rely on SMAs. You don't want to strictly rely on SMAs. We want to use SMAs as a tool to help us look for a possible trade. You see what I'm saying? So you're going to want to make sure that you are, paying attention to the current price, right? So with the SMAs, I like to make sure that I'm doing my markups on the hourly time frame. I like to do my markups on the hourly time frame, and I like to put my entries on the 15-minute time frame. Okay, so whenever you doing your markups, make sure that you're doing your markups on the hourly time frame, guys. It's important because this is a scalping method, and you don't want to really look for it on a 4-hour, because it's going to look way different on the 4-hour versus what it does on the hourly, right? And remember, we're doing these trades quick. We want to get in and out the trade, so we want to make sure we doing our markups on the hourly time frame, and setting up our trades on the 15-minute, or taking our trades on the 15-minute. So now that you know how that the SMAs work, now let's see how we could possibly take a trade and how we could use these SMAs to actually help us out in a trade. Okay, so when you're looking for a trade, you're going to want to first identify what type of trade you're looking for. You're looking for a buy or you're looking for a sell. And you can determine that based off the current market price, right? So let's just do this for an example, okay? So we see here that we have, markets begin to cross above. Markets begin to cross above this, this 20-day is beginning to cross above this 50-day moving average, right? So we just gonna look at it like, okay, we see that we have this big push off of the support. And remember, guys, we're using the SMAs with the current price action, with what we already have, right? So if we look up, we can see that prices pretty much is in a downtrend, but it's looking to turn around. Because why? We see this bullish engulfing candle, and we see that, you know, the 20-day is beginning to, we see that the 20-day moving average is beginning to cross above the 50-day moving average, right? So what we do, you know, we want to place our trades. We're going to want to place our trades. And if I was looking at this, you could kind of use where price was. If I was to take this trade, I would probably set my stop loss right around here to where is, what is that, 0.86. 0.86, that's where I would set my stop loss. It's not too low of a stop loss, but you know what I'm saying, we can, like I said, we making these trades quick. So if I'm looking for my take profit, I'm gonna probably put the take profit right above the SMA. You see what I'm saying? Because this is where price, you know, prices is, you know, prices has been to this level. And the one thing about price, bro, like the one thing about price likes to go in the direction it's already been. You feel me? So like I said, guys, we're gonna take these trades, but we gotta be very smart about how we take these trades. So as we continue, boom, we get in for the buy. So we get stopped out. But look at this huge wick, guys. That just show you the market is crazy. That's why I said it's important to use proper risk management, because you never know what's going to happen. But watch, right after the price went down, look what it does. It shot right back up. So you have to be careful when you're using these SMAs, guys, because you get wicks, and that's just a part of the trading game. I know it's been plenty of times you guys been in a trade and, you know, you looking at the market and it's like, okay, you get a huge wick and it hits your stop loss. And then out of nowhere, the price begins to turn in the opposite direction and it begins to go your way, right? And it's like, bro, what's going on? But look, that's the market. That's how it works. You feel me? So we got to take everything with a grain of salt, and we got to make sure that we setting ourselves up for success. So yeah, guys, that's pretty much how to use the SMA indicator. Remember, if the 50-day is above the 20-day, then we want to look to begin. Then we want to make sure we're looking for sales. But if the 50-day is below the 20-day and the 20-day is above the 50-day, then 9 times out of 10, the market is looking to go up. So yeah, that's pretty much it.